educational, which is good. And we're talking about crypto and technical analysis. So crypto itself is a whole crazy different field, and TA is also kind of by itself, and it applies to different markets, right? So
That's
there's
true.
different applications to that.
Mm-hmm.
But the big question is, does it actually work? Right? We see technical analysis, or we see people all over social media. And when I say people, I use that loosely because sometimes there's characters, right? So there's animals and other crazy things in crypto space. So we'll get into that. And at the end of the video, if you're watching this and if you actually want to get an idea as the overall market and where things are going, we're going to have that towards the end. So let's get a little educational at the start, and we'll save the real market talk towards the end. And Will, we got to give you credit because we've been spot on week after week after week. I got to give you credit for that.
Thank you.
All right.
It's not easy being right.
Very true. But we have the past and experience to prove that you have been right. So before we get into everything, I'm going to put up the disclaimer. So we'll be back in a bit, and let's start learning some stuff. I like this. Today's show I'm actually excited for. Beyond the FOMO stuff, we got to get smart.
That's right.
All right, disclaimer time. All right, so we're back. Now, Will, technical analysis. What exactly is this? Can you just give us, so beginner 101, what is this? And then if you have like a more advanced expert kind of definition, give us that too.
All right. Yeah, no problem. So when you talk about markets, any market, whether it's commodities like wheat or corn or oil, crypto, equities, all these types of things, there's different ways to analyze them, as I'm sure everybody's aware. And technical analysis is one of the aspects you can use to analyze markets. It kind of stems from the idea that all of the information and news becomes priced into the price, and the price is kind of the consolidated or distilled version of all information known at that time, right? What you can do is look historically and see patterns playing out. You can see them. You can look at any chart and say, like, there's these patterns, and you can see them forward again, happening again. And there's different kind of theories as to why this kind of happens in markets. There is an idea about how information travels through, like, kind of, if you think of it like in these wider and wider and wider circles of influence. And so this is kind of one of my favorite theories about why it applies, is that as information goes from this kind of source of insiders that are really deeply in the know about a particular market, and it goes out, like, those people maybe tell their friends, and then they buy something, and then they tell more friends, and then they tell more friends, and then it gets on social media, and then it gets to this huge audience, right?
Okay. So for those that know it, we're not necessarily talking about insider trading. We're just talking about like friends, family, coworkers. I mean, right, there's different levels, I guess.
So as these waves kind of propagate outward, it creates these ripple effects in the market where there's always, on any particular market, there's always buyers and sellers, and they're armed with different amounts of information, and they're always contending for what direction to push and pull it in. So it creates these kind of waves in the market as, like, pressure goes one way or the other, and those waves form patterns, right? So for example, let's say there's an insider or somebody who, like, has access to information that knows that in the future, this price is going to be way higher, that currently this is very underpriced, this asset. It doesn't matter. It's a whole bunch of people selling. If that guy or institution or group of people have enough money to keep absorbing and buying it when they think it's underpriced, the price of that asset will keep bouncing off of that, right? And then eventually the sellers will become exhausted. There's just no more selling. And then this will go up ultimately to their target, right?
Okay.
These create very specific patterns. And that is kind of the origin or thesis of technical analysis, that you can see that in charts.
Now, so when we're talking about just patterns in general, a lot of times we have patterns that are repetitive or cyclical, right, in nature.
Yeah.
And then sometimes you just have something that just randomly appears, right? I mean, so
Yeah.
an anomaly, right?
Mm-hmm. So there's other parts of things that happen in charts. And one of the things that divides kind of noob technical
We could
analysts,
call them noobs. We could say beginners. Yeah.
is the ability to see the difference of when that has happened. You know, I was reading a newsletter from an institution the other day that is, I'm not going to call them out by name, but a popular institution that a lot of people get their crypto information from. And they were doing technical analysis on Bitcoin using the COVID crash to establish like a bottom price. And that's not the way that you do technical analysis. That, as we all know, is a black swan event. That was an event that nobody predicted, and then everybody panic sold. And so all of these analysis, all these projections, like, were completely thrown out the window, right? So if you use, for example, the bottom of this COVID crash as kind of setting some kind of baseline about the prediction of the markets, you're
going against.
That's not how it works, right?
Okay.
Yeah.
So I got the next biggest question is then, can anybody get into this technical analysis thing? Is this for everybody, right? I mean, is this something that, so myself, you could use me as an example. I'm not that big on TA. That's just me. You know, I'm more into just looking at the projects and studying the teams or the people, right? Psychological aspect of it, which I guess you could also say is like the fundamental analysis aspect, which we can get into. But like charting and looking at finding cycles and repetitive stuff, like that takes time. So can anybody just get into this? Can we do it part-time? Does it have to be full-time? I mean, what's the barrier to entry into something like this?
It takes a lot of time to build up experience in the beginning. I'll be honest. Like it took me years. We call it chart time. You just have to see, thousands of charts and then just kind of build up this kind of memory of histories of different things and what has happened and why it happened. And once you do that, it's kind of like you get a gut for like, okay, I saw this like a whole bunch of times play out. It's probably going to play out in this way. Right. Mm-hmm. And so you have the classical patterns, and those are very easy to learn, but you need to combine that with your actual experience to say, like, realistically, how often does it play out in this way in this scenario?
Okay. Yeah. That's actually what I was going to ask. So just because you could go take a course, right? So technical analysis in itself has been around for years, right? There's different levels or there's different types of charting that you can apply, mm-hmm. but a majority of that has been around for years, right? Like nothing really has changed.
For a long time, for decades. Yeah.
So with that being said, we can go out, we could take these courses, we could study them, but just to reiterate what you said, you have to know how to actually apply it. And those are two also totally different things.
And the other thing too is the emotional aspect of it. Many traders fail because they'll do an analysis. Their analysis ends up being wrong. The price goes in the opposite direction from what they thought was going to happen. And then they can't accept the loss. Sure. They can't close the trade. Right? And that's the emotional aspect of it. Right?
Yeah. Now, in the crypto space in general, I just want to put this out there to get your opinion on it as well. As we had mentioned at the beginning of the video, when you go onto, and I'll just say Twitter as one of the primary platforms, you'll see people calling different cryptos, and it's usually not on like the entire crypto space. It's coin or token specific, but you'll see them putting out all these different charts, and then the next day everything's totally different. Or you'll see them doing TA, and then all of a sudden you'll look for that tweet and it's gone. Yeah. So you guys, when it comes down to this stuff, always pay attention to who's providing the content. Go look at their previous trades because you could track this stuff too, right? So you could say, okay, here's what they called before, just as yourself, right? We go back to the other videos that we have on this channel to see your live charting to prove that everything that you're talking about and educating us on is accurate. It's valid. It's right then and there. But on Twitter, especially, there's just a lot of people that put out these charts where they might have an understanding as to charting and these indicators, but again, perhaps don't know how to then apply it, right?
Yeah, then that's the difference of experience. Like a lot of these people claim they're analysts and they've only been doing it for a couple of years. I was day trading for 5 years before I even started my company about trading, right? That's 5 years of trading before that. And since then, I've been trading for
that's
4
your
years.
charting time right there, as you mentioned.
Yeah.
Okay. All right. When we look at these charts, so your typical chart, sometimes we have bar charts, then we have line charts, right? There's different graphs, I'll say, or different metrics. But typically, we're always seeing green or red, back and forth. But I think the primary type of chart that we see are candlestick charts, right?
Yep.
Now, there's different, like dojis and different indicators of each candlestick, which we're not going to get into on this episode. We could dive into that at a later time. But is that the primary type of chart that people use? Candlestick charts? Is that like the go-to?
Really, the most accurate way is to look at a whole collection of candlesticks and then see a pattern from it. Like one candlestick, like for example, like something like a dragonfly or a doji or something like that. You have to take it in context. If you know a market is very overextended in one direction, and then you happen to see a candle look like that, then that in context where you've framed it in that way actually is very significant. But if you're looking just generally and then you see one of those just in kind of just a whole series of them, like it's kind of just noise.
Okay. But so I guess let me rephrase my question. So candlestick, the charting system as a whole, if you pull back 4 hours, 12 hours daily, is that still the typical kind of chart that you're looking at, or are you looking at line charts or different metrics, I guess?
I always use candlesticks, and it's mainly because I want to see the minimum and the maximum extent of the price. And the wicks on the candlestick will show you that, the line that comes out the top and the bottom. And that's really the only reason. And you'll see when I've charted in the past, I don't even put colors on them. Everything is white.
Yeah, that's actually good. I didn't think about that.
Okay. Putting the green and the red is really misleading. Like it puts your psychology in a way where you see a red candlestick, you think it's going to keep going down, and that's just false. So I just make everything white.
It's actually interesting. I didn't think about that. Mm-hmm. Yeah, your charts don't have colors.
And that's very specific. I learned that years ago, not to put colors on them. I take all the colors out. TradingView has them on by default.
Huh, that's true. So that's actually interesting. I didn't think about that. And now I'm going to go look at all these other TA people through social media to see if they actually have a color on or not. I didn't think about that.
Color is very misleading.
Yeah, can be. All right, that actually coincides with this next question. This is the important part. So we had talked about knowing the tops and the bottoms. So this is basically the support and then resistance, right? So that does apply across the board. Everybody has to know or understand as to what support truly is versus then resistance to then keep the price down. That applies across the board, right? But you just have to, again, know how to apply that, because I'm sure there's plenty of times where people will say this is support, but then you also have that term saying, here's the next price level if support breaks. And then all of a sudden the price just plummets. So you can say that this is support, but that doesn't mean that it can actually be support, right?
Yeah. So take a step back and think about the psychology of people trading any asset, right? People are going to buy it at some price, right? And then they're going to want to sell it at a profit at the end of the day. So if you see the price of an asset going above where it has been historically, that means that everybody who bought it is now in profit. So at some point in time, various different people are going to start taking profits at when they think is a good time, and they're going to do a calculation in their head. Well, do I think it's going to keep going up from here or not? Right? And everybody's going to be different in that way, right? But you'll see, like, the higher it goes up from where it's been historically, if it's reaching new highs, more and more and more people are going to sell the higher up it goes, right? And this is ultimately what sets the upper limit of any asset.
So this is a tricky question, and I know this doesn't apply all the time, but in the crypto space in general, right? So we'll use both actually. Let's use crypto and then like your typical stocks. In crypto, I guess in stocks too, you have the low cap, mid cap, high cap, right? So then you have blue chip companies, different, whatever. There are points when you'll have a tremendous amount of sellers and you'll say this is the support line. And you'll have somebody actually buying up, as actually the example we used earlier, you'll have somebody constantly buying that up or absorbing that impact, right? As somebody that's applying TA, you may not know what's happening behind the scenes though. Does that make sense?
Yeah,
right?
you are usually an outsider as to what's going on a market when you're a trade. I mean, there's a different class of analysts, which are what I call like influencer analysts. Yeah. And typically what they'll do, right, they have a big following of people.
Are those the ones that change every single day? Yeah.
Yeah. Yeah, this is the scheme, right? They'll pick a micro cap stock and they'll do some really basic analysis on it to then get their followers to buy it, basically. And then it becomes a self-fulfilling prophecy because they have so many buyers that buy it up. Their analysis proves true, but it's, their analysis was just kind of arbitrary, right? They're really using it as a promotional tool to get all their followers to buy something. True. Right? That's a whole different thing.
I'm going to add that. So I'm going to actually add this as one of the last questions before we go into the real market talk. But there's some sneaky stuff with that. Again, that's why we mentioned, well, actually, we're going over this stuff so that you can learn, start educating yourself to apply your own TA, right? And we'll have future videos going more in depth about this. But it goes back to saying, if you're seeing somebody else putting out these charts, even us, go look at the prior charting, get the understanding of it, and don't always just take it at point value, right? You got to do your own research into it, because especially in the crypto space, and when it's not a real person putting out these graphs, we've all seen like crazy stuff. So I'll add on to that in a bit. Is there a way to identify the support and then resistance levels, or does that just come again with experience?
Yeah, you can see it. There's a thing called the VPVR indicator on TradingView, which will show you where a lot of trading has happened, what prices a lot of trading has happened. You can also just visually see a lot of times where the support lines are on a chart. You'll see that it bounced off this price and it bounced again, then it bounced again off of it. Mm-hmm. And that will create a floor, and that's the support, right?
Okay.
Similar for, resistance levels. Now, it typically comes up where people will draw these kind of diagonal lines through charts to try to figure out different types of wedge formations. Those will always be subservient to these horizontal prices, horizontal resistance, horizontal support. Those are always considered more important and first versus these kind of wedges that can happen in charts. And the reason is because when people buy and sell any asset, they have to realize a profit or a loss on the vertical axis, on the y-axis. It's not on some weird kind of diagonal axis that people are profiting off of. That's not normal. Does that make sense?
I get it.
Yeah.
Now, the tricky part with all this, at least from my perspective, when we see people applying these, all the different lines and everything, we're always seeing the past. And I think that's the struggle a lot of people typically tend to have, because you don't know what's going to happen in the future. There are a lot of times when you see experts. I'm going to actually say this, and I don't have like the exact accurate numbers on this, but with like legit traders, full-time traders, talking about like the big companies, the big guys, investment bankers, everybody, aren't they actually only like accurate like 60%, 70% of the time? Like something, it's not that high, right? It's like 60, 70%, right?
Mhm.
And that's because again, we're trying to get an understanding as to where this price or everything is going in the future. And that's, if you don't have this freaking crystal ball, you're not going to actually know 100% of the time. That's like the scary part. So we could say
So you can actually, I mean, here, this might blow your mind. You can actually be right half of the time and still profit.
That is true.
And
Yeah.
the way you do that is that your stop losses are less than the amount of profit you're taking per trade. So you can only have a 50% win rate and still make money even.
Okay. Even in the crypto space.
Even in crypto.
That's going to be in the back of my head. I'm just thinking about other episodes that we could have. I think we could honestly just have a whole video just on support and resistance, right? Like I think that in itself is pretty important within the space, especially with like micro gems, the mid cap, large caps. There's so many different aspects to all that a lot of people have to kind of get an understanding of. All right. Are there any actual limitations to this? And I use that kind of like loosely or broadly. Like what are we limited to, if anything, when it comes down to these charts?
You always have to realize it in context that, I mean, you need a backup plan if you're wrong, right? Because it always could, right? Whether it's a black swan or just some unpredictable event comes out, or you're just analysis was just wrong, right? So I mean, and this is one of the big values that we have at Flourishing Capital is start from the risk management side and then build out the projections. If your risks are covered, then that's the most important thing. Capital preservation, right? That's the most important part to start from.
Yeah. Now remember, we have even ourselves to be we'll bring out like the humble side. So you and I, right? We just started this whole market talk segment, but I think there was like 2 weeks or so where we didn't go live. We haven't talked, or we didn't put up any charting. And the following weeks, we're like, we should have done this, or we should have, like, we knew this was about to happen, right? Because there is that emotional aspect to it, and that's also the difficult part that I think a lot of people will run into. It's the emotional side of it, right? I think that's like the hardest part.
And it's the one thing that requires the most work, is to control your own emotions with trading. And that's one of the reasons I started Fate to begin with, is because I would do an analysis, and this we're talking like 2017. I would do an analysis, and then I would be wrong. And then even myself, I had a difficult time accepting the loss and doing a stop loss on it. And at that time in crypto, these complex financial instruments didn't even exist yet. So oftentimes what would happen was these whales would step in that had so much money that they would push the price past everybody's stop losses and then ratchet it back in the other direction. So you could never tell if it was that type of manipulation was about to happen or not. Nowadays, markets are much more tame in crypto in that regard. So it's much easier and safer to play in that regard.
Yeah. I think we'll have a video also on margin trading. Mm-hmm. So everybody has their own opinion on that. So I think that's why that would be a good episode. We've seen people lose literally like everything. Leverage trading is bad.
No, I leverage trade. I trade options, margin. I do all sorts of stuff. I don't trade futures. I never really got into it.
Okay. But, that depends. Again, it goes back to what you just said before, that you have to have a plan, right? There's a lot of people that go into leverage trading, do all this crazy stuff, and then they don't. Again, they're kind of actually. I would say that they're gambling. Is that wrong to say? There's some people that really just gamble.
They are, and you'll see it if you're on like Reddit on like Wall Street Bets. You'll see all those lost porn like posts. Where it's like, I sold naked puts and I lost 300 grand. And it's like,
it's terrible.
It's like some people, they don't take it seriously. Like, dude, that was somebody's entire retirement that you just lost, or your own retirement that just went up in smoke because you just not. Thinking clearly,
Gone. That's not good. We've seen that plenty of times.
Yeah.
All right. just to reiterate on a prior note, there are a lot of people in the crypto space, and this is just for everybody to get an understanding of. There's a lot of people in this crypto space that will provide charting, especially for these low market cap like gems, and they'll actually be the ones that were actually accumulating like in the past like week, 2 weeks. So this is like going back to the insider type stuff. And there's just these like pump and dumps. I mean, that's basically what it is. It's like a pump and dump group in a way. They'll call out these trades, they'll make all these announcements, but unbeknownst to everybody within the groups, they are the ones making the trade before everybody else. So there's some projects which can be easily manipulated, especially within the crypto space and like DeFi, right? It's decentralized. That would be much harder to do like in stocks or like penny stocks, So
Yeah.
you got to pay attention to that. You might be looking at the charts. This looks good, but go back and look at prior volume, right? You could see like buy ups and all that kind of stuff. There's like tricky stuff to that.
Yeah. So you see the scheme that I see play out sometimes requires two people to coordinate a pump and dump. You have person A, who's a major influencer, person B, who's a major influencer, and their friends, right? Person B FUDs the hell out of some small cap project, right? Either an altcoin or a small, like a penny stock or something. Like they're FUDing it constantly. Everybody sells it. Then person A acquires all these shares, right? Or maybe both of them are acquiring them during the FUD, right? Both of them are buying it up. Everybody's selling.
They're absorbing it, yeah.
Then the other influencer pumps it up, right? And then all their followers buy it and then they sell into it. So they got it cheaper than it should have been and sold it at higher than it should have been, right? It creates this wave effect.
Yeah. See that time and time again. And it goes back to just the blockchain. You could actually see some of these prior buy-ups, and you can actually see when you start to find out which groups are doing what, you can actually go back and you can see all the stuff getting like primed, getting ready. I just find that kind of stuff interesting. I like to do the research into that.
This is why I tackle the blockchain movement, is because it becomes really obvious which wallets are buying what. And
yeah, that's the funny, I'm actually confident in this, and I'll make this one public. Scammers in this space, and I'll just say it flat out, a majority of them are so confident in themselves that they actually do the same thing on repeat. Like it's the stupidest thing, right? If you're a criminal, you wouldn't rob the same bank over and over and over again. But in this space in particular, we've seen the same people or the same wallets, I'll say, do the same stuff on repeat over and over and over again. It's amazing, and people still fall for it. I don't understand.
Yeah, it's that situation, and the same group of people will keep creating scam projects, rug pulls, like, and they'll just go on to the next one, the next one, the next one, because they know it works. Yeah. And it's just a psychology game, right?
Yeah. Never understood that one.
This is why it's important for founders to be doxxed, right?
Yeah. I've seen people, and we'll use TikTok as an example. Ironically, I've literally seen I'll say a kid, because he looked like a kid. Maybe he was 18 and he was an adult. He would literally put themselves on camera, start talking about a project, and then just take everybody's money. Flat out. In this space, I've seen all crazy stuff. We could have videos just on that. They'll be docs. They'll put their name out. They'll do live chats with people, and still take your money.
Yeah.
This space, it's overwhelmed with a lot of those scams.
That's a dangerous game to play, because ultimately the government's gonna get them. I mean, especially if you're doxxed. Like, come on.
Yep. All right. So this video, we want to just kind of start introducing the educational approach, right? We're going to have a lot more of these, and we'll further expand upon this. So if you guys have any questions, leave them in the comments and join our Telegram group. We're here. We're providing, again, it's a whole educational approach. We want you to join us, and we want you to tell your friends, family, coworkers, we're here. We're here to help onboard people into the space and make sure that they're actually understanding what they're getting involved in, right? We've been through this. We understand a majority of it. we can't necessarily hold your hand the entire way, but if we don't have the answers, our community does, because we're educating them at the same time. So leave a comment. I put the Flourishing Capital as well as my group within the description, our Telegram groups, Twitter as well. But, and I'm just cognizant of the time. You want to do some live market talk?
Let's do. I mean, yeah, I feel bad that we kind of went off of a tangent here. Yeah.
Yeah.
Yeah. Sure.
So, Leo, by the way, we're just reading some of your comments. Personally, when it comes down to the so-called like influencers in the space, I have seen the SEC start going after them. You could actually go onto the SEC website. I'll find the link and I can actually put it. I'll respond back to you with that. They put out publications constantly about their investigations, and they're actually targeting a lot of these influencers because they don't have disclaimers. They're not providing all the information that they should be doing to their followers and community. And there's other stuff to that, but it's happening. Just because you're doing something now doesn't mean they're not going to be looking at you 2 or 3 years from now. Unfortunately, people don't.
Yeah, and that's Ripple is still dealing with these lawsuits, right? And they're coming after them from their ICO from like 2017, and it's still just they're tied up in court.
All right, let's take all this and apply it. All right, so I'm going to do a screen share. We're good to go. And it's so weird, honestly. I didn't even think about it that you don't have like the red and green on your charts.
Nothing has them.
I honestly didn't even think about that.
None of these charts. Well, this one I forgot to take it off, but none of these.
All right, so let's look at the big three. Can we do that? Can we look at Bitcoin, Ethereum, and then BNB, or what else?
Yeah, I think this is good because we can see this decorrelating pretty clearly now. I have in the background, these are the S&P, and you can see that Bitcoin's just on a tear. It's just going up and up and up. And you see how I circled all these stable coins that we're dumping here. Remember this? It's happening again. Over here, you can see it. I'll even circle it again. Happening again. More people are buying it again here in this area. So, we're still waiting for that critical breakout above this resistance line. Remember how I told you how horizontal lines are always more important? The reason why this diagonal here, this log trend line is important is because it goes back to like 2015. So it's been respected so many times over so many years that it's hard to deny, honestly. So I said, buy it here, buy it here, buy it here, right? Because it's bouncing off of this support. Now it's going to come up to this resistance, which we've tried to break out 1, 2, 3, 4 times already, right?
5th time's a charm. Let's do it.
Yeah, time's a charm, right?
So that's that, and not to go into another tangent, but that is a form of TA. Sometimes you say like the 3rd time, it usually does break, right?
Yep. And you saw it here with this. Well, it's usually either 3 or 5, in my experience. So see here, we had a descending.
It wasn't the 3rd, now it's the 5th.
Huh?
It wasn't the 3rd, so now it has to be the 5th this time around. Exactly.
Yeah.
Okay.
It's weird how you see this kind of harmonics with markets a lot. You see this one here. We had 1, 2, 3, 4, 5, and then we broke to the upside. This is kind of related to Elliott's theory. Let's see if I can draw it for you even.
That's a whole nother, that in itself, the Elliott waves, that's a whole other topic as well. And that's actually is like, I would say that's even like years of understanding.
See, this is kind of a typical 5 pattern. You see in orange. I don't know if you guys can see this really clear. I'll make it even bigger. 1, 2, 3, 4, 5. And then we broke out the other way from this wedge. You'll see that a lot. It's either 1, 2, 3 or 1, 2, 3, 4, 5, typically. I think it probably even happened here. We'll do it again. 2, 3, 4, 5, and then it broke the other way. Same deal, right? 1, 2, 3, 4, 5, and broke the other way. Right. I could keep going on and on about this.
Yeah.
So yeah, we're kind of reaching the apex of this wedge here, which chances are break into the upside, because every time we've tried to break under this wedge is failed. This one violently reacted, right?
Yeah, that was a huge one. Yep.
Yeah. Can you imagine being somebody shorting it down here? Those people are not happy right now.
Nope.
Remember how I told you before about tracking the total market cap of all altcoins in terms of Bitcoin as a sign, right?
Yep.
That's another way to analyze this. And we kind of reached this, what's called a cup and handle pattern. But it's kind of rounded out this bottom, and now it's going back up, which means that people are starting to speculate on alts again, right? That's actually very bullish, because like I said before, typically what happens is cash comes to fiat into Bitcoin, and then from Bitcoin it goes to major cap alts and then into small cap alts. All right, so this is the beginnings of that process here.
Okay. Now's the time to continue doing all your research onto these low cap projects. Make sure you're ready for the next bull run.
So this is the next phase. This is the next phase. We have Ethereum and BNB here.
They're all they're all going through resistance.
We had this descending broadening wedge, and we broke out finally. We were tracking this. Remember, kept hitting it here. I drew this pattern when we touched it here. Tried to break out third time, and then fourth time, I guess. Yeah, so that's a 4 pattern, I suppose. Well, let's see what we got here.
This is why I also love doing these videos live, right? Because I just remember all these other indicators and charts from all these prior videos. go look, watch the other ones, and you'll see them. We go into more depth about them at that specific time, which I think is also cool. That goes back to my other question or even concern with technical analysis, that you don't always know the future.
Yeah,
but set it up. I think we just lost. I think Will just popped out. Let's see. I'm going to send him a message.
About 100 area. So that's going to be major resistance here.
Okay. I'm not sure if we lost you or if you came back, or if I disappeared. I got to watch the video again.
Sorry. Hey, do you see this still? Or?
No, I see it. Yep.
All right.
That's now the negatives of going live. Sometimes we get delays. All right, but so far everything is breaking out, which is nice. So we're going through
also breaking out. And the other thing too is cake swap, right? Pancake swap, which we have here. Remember, I said when we see a bottom of this and this comes back up, that means that DeFi is coming back in the picture. Small cap alts are starting to come back in the picture, right?
Yeah.
And we saw the announcement.
Will, we literally made this video. We literally said, what is altcoin season? We explained to look at this, and that's all coming together right now. That was a week or 2 weeks ago. Yeah.
So let's look at something that we haven't looked at before. And I actually have not charted this one before, but I'm really curious about Avax.
Okay. Yeah, in 7 days, it's already up like 22%. So Avalanche.
So as you know, that's a layer 2 for Ethereum, right?
Yep.
So this, in my opinion, will be predictive of when layer 2 is going to really kind of become big, right? You'll see people speculating on Avalanche, the coin first, and then tokens will start en masse going to layer 2, which layer 2, I feel like is still
in its infancy stage.
It's big, but it's not really popularized yet, I think, in my opinion. So this is still kind of, I think, not really super bullish to me yet. It's kind of just in this consolidation area right now. When I think when Avax breaks over like 100, then that's going to signal to me that a lot of projects are coming to layer 2 Ethereum, and that's going to be bullish for basically everything on layer 2.
So that's another like 10%, 15% from here.
We're close, right? So
Yeah.
that is
85 to 100.
Right, this is 100 here, and you can even see that that was a perfect touch.
Yep. Yep.
In any market, like these kind of round numbers, like 100, 1,000, 10, think like these powers of 10 usually are they've become very important support and resistance lines. And I think it's mainly due to human psychology. They'll just typically set a take profit right around there, or a stop loss right around there, right under it, things like that. So they kind of automatically, just due to human psychology, become these natural support and resistance lines for any asset. You can even graph equities in the same way that way.
Well, I think that applies to products and services. That's why they usually have stuff as like $1.95 or like 49 cents, right? They're right below that number. It applies to a lot of stuff. So yeah, it's probably psychological.
And I'm actually really curious with Avax to chart this on a Fibonacci.
Oh man, now you're just throwing out other terms.
So if we chart this whole thing, you'll see that this Fibonacci 50% retracement perfectly lines up with $100. Look at that, how perfect that is. The orange, you can't even see the orange because it's exactly in the same spot as that yellow line. The 50% retracement of Avax is exactly $100. And that's very important. Why does it happen? It's because big money is typically smart money, and smart money usually doesn't go all in a position. Usually what smart money does is they'll DCA. They'll buy a little bit here, then they'll have another buy order farther down, then another buy order farther down, right? And similar with sell orders. They'll sell a little bit here, a little bit more up here, a little bit more up here, a little bit more up here. The net result of that type of strategy is that your cost basis is always halfway down the current price from where you started buying. So if you think about somebody who was a whale who started this type of DCA strategy around here, around $100, like let's say they started over here at $100, when the price touched down here at 50, right? So let's say we were down here, and then some whale was buying since this yellow line, right? What's the cost basis of that whale at that point in time? This is very important to know.
Could average out to like $75, right?
Their cost basis, yeah. So the price is here. Their cost basis is here right now.
Yep.
So the price has to go all the way back up to $75 for them to even profit at all.
Or break even, yeah.
See, and that's important because you'll see if I was to chart another Fibonacci between here and here, this would be the 50% Fibonacci level. And it's also the break even for that whale at the same time. And that's why 50% retracements are very important to watch. They're the most important Fibonacci level to watch, because that's typically the break even of most of the money.
Sounds like we need another video just on what the Fibonacci is charting. You get all Italian, the Fibonacci code, or I'm thinking about Da Vinci code. I'm mixing it up now. Yeah. Okay. Well, we do actually see that a lot as well on charts, Fibonacci's, the numbers, or the pattern of numbers, right? So like 2, 4, 8, 16, that, or sequences, right? All these numbers kind of play a role.
Yeah, well, they're all over nature, right? They're all over nature. It's a really fascinating topic to even just read about in general about how Fibonacci and the golden ratio and all of that is kind of connected together with so many different natural processes and what the mathematical relationships of all that is. I recommend it because I enjoy that type of reading.
I like it. We could geek out. That's it. We could have an episode just on that. I'm down 100%. All right. Let's bring this to an end. But so for right now, everything looks like it's kind of getting to, well, it's at the resistant levels, right? And this is the fifth time. So perhaps fifth time is a charm, right? So we could get above that. And then all of a sudden everything kind of goes back up. So we could end this on a positive note. Everything looks like it's going up.
Yeah, I'm still very bullish on crypto. I've been bullish since this recent bottom, and we are seeing a lot of signs that will continue to make it bullish going forward.
Okay. Yeah, I don't want to expand on that. I like where we have it right now. Positive note. We'll leave it on that.
Right.
So for those that are watching, again, thank you for joining us. As always, don't forget to leave a comment, share the video, hit the like, but then also subscribe. We're going to start coming out with a whole bunch more of these educational videos and start diving into some projects too. So it's definitely good for those that are new into the space. We'll say the noobs. But even if you've been in this space for years, we're going to challenge you. I think that's kind of like the fun part too. You want to have some feedback, go back and forth, because I think it's truly impossible to know everything in this space. There's always something new kind of coming out, right?
Yep.
All right. So Flourishing AI, the links for everything is in the description below. Go check them out. And as well as Beyond FOMO, we're starting some interesting FOMO type stuff. So the fear of missing out, which you don't want to do. So Will, thank you again for joining us, for educating us on technical analysis, and then showing us, again, some live TA. Go check out the prior videos. We've been pretty accurate.
Thank you. Thank you so much. This is always super fun to do. I love these.
All right. We'll be in Telegram, and we'll see you guys there. Thanks for joining.
Thank you.